Here's veteran Nirmal Jain talking more about the markets. He's giving a thumbs up to the 3 years of the Narendra Modi government and expects inflows to remain strong on the back of good leadership. Here he is in conversation with Ajay Sharma.
Let's start by understanding your view on how you are analyzing Modi government's work in the first 3 years. We are having this chat at a time when they are finishing 3 years in office.
So I think now government is getting its acts together. So initially first or second year there was a lot of skepticism about whether government will be able to get its way through and get the reforms done because they did not have a majority in the upper house. And also, I mean, most of the ministers were new. But now I think after 3 years people are able to see the direction which is very clear, which is absolutely more or less, as what the party had promised before election. So they are moving on the reforms track and they are getting many things that were not proper or that were broken, or they are just trying to set it right. So most of the ministries, I think have achieved quite a lot in the first 3 years. Of course, in 3 years' time for a country like India, your task or agenda is not over. But most of the ministries that we see, you look at power, a lot of work has happened in rural electrification. If you look at roads, then orders have started moving and highway construction has begun. Even in railways and defense, things were more or less in a stalemate kind of a thing. They got out of that. The policy in terms of about FDI also has been eased a lot. Number of other major big ticket reforms like GST, they're on track. And I think after UP election, government also has got confidence. More importantly, more than government, now people have got confidence in the government and the investors. So when we meet large investors or we meet even people who are retail investors, HNIs, first 1 or 2 years they're watching and their fingers were crossed. They just wanted to see how government performs. But now I think more or less people are getting very confident about the direction. The more RERA also has become a law. Bankruptcy law has been passed. GST is 1st July looks like very probable date. And even demonetization, sailed through. Of course, it was a lot of surprises happened in that. So with this, I think government is getting confident. People are getting confidence in the government. So it's a good situation to be in.
Nirmal, power, be it oil and gas, real estate, of course, RERA is there. Barring NPA resolution, which still remains a sticky area, which was most you were most impressed by the work done in the first 3 years?
So I think power and road, these ministries have done very well. And power ministry, I think, because what it inherited was not a good state of affairs in terms of raw material as well as the way discoms and the way the industry was operating. So, so I think power, and road sector, these sectors have done very well. But other sectors also are moving in the right direction now. They may be a little slow, but they're moving. But you are right that, if you ask me one big task that is not done, which is NPA resolution of the PSU banks, because PSU banks still are a bit directionless in terms of what's going to be their future. So some courageous steps, either to set up a bad loan bank or, merge and consolidate and allow them to raise capital is required because investors are losing confidence. These banks are losing market share. So either government should decide whether they want to be in this sector, for how long. I think this is one sector which needs very quick and urgent attention. Among the bigger things, I think this is one area which is left, where a lot of work has to be done still.
Right. Also, we are having this chat today when markets are at record high. You interact with investors across the board, be it retail, HNI, even institutional. What is the sense you are getting regarding how they are looking at the leadership in the political front?
So I think more or less people are very confident about leadership and the economy's direction. What they are worried about, maybe two things. One is valuations, because people think that valuations are run up too high, earnings are still to catch up. And when they look at the historical perspective, and the PE multiples were low in a low growth era and a high interest era, I think the new normal of PE will be much higher, because PE start with a reciprocal of interest rate and you add growth and reduce risk. That's a theoretical framework. But as interest rates head down, I think PE multiples will get stabilized at a higher level, and as the growth expectations also build up and people get more confident about future of the economy. And two, I think, as I said, there are two major risks or things that people are concerned about. Second is geopolitical, the global risk all over. Because there are always a little bit of problems happening at the border or elsewhere in the world in terms of terrorism or terrorist attacks, as we saw, or the way large economy like US, and the leadership there will behave for visa, for pharmaceutical IT companies, or in general. So, and plus, even Europe is passing through a lot of turbulence politically as well as economically. And how will that impact India is always a concern. But as far as India is concerned, I think most investors are fairly confident about the way government is moving.
Right. We've also observed the last couple of months, in fact, last time when you were on our channel and now, that the flows have been unprecedented. In fact, some of your businesses are doing very well in getting flows into the market. Do you think this flow of liquidity is likely to continue into the market, both from domestic and the overseas side, when you talk to your investors?
So I think there's a structural change that has happened in terms of flow of capital in the market. So domestic flows have become very strong, and I think this was something which was long overdue, because India as an economy has got almost about $500 billion of savings, and a very small part of that was coming to equities. And just $20-25 billion of FI money was, trying to, market was dancing to the tune of FIs, which, and what happens with FI money is that everything is all right within the country, but something goes wrong outside and your markets become very volatile and turbulent. And that's not good for retail investors. So one structural change that has happened, that the local flow, the domestic flows have become very strong. And this will make markets more stable and less volatile. Don't go by, of course, equity markets will always be a little volatile. You can't expect equity markets to rise steadily like debt market, interest rate or whatever. But given the, say, compared to historical trend, equity markets will become fairly more stable. Second is, as far as foreign flows are concerned, most of the foreign investors want to invest in India, but many of them basically, either exited or did not come when the demonetization was in process. So now they are looking at valuations that they run up, so they are waiting for a correction. But in a medium to long term, you will see money coming from foreign investors as well as domestic investors to the market.